On L&T Tech Services. We have Amit Chadha, MD and CEO of L&T Tech, joining in to talk about the quarter gone by. Now, for the company, while growth bounced back in a pretty meaningful way in the second quarter, the question really is on the 8 to 10% revenue guidance. You need to do at least, I think, 4.5 to as much as 7% growth for the remaining quarters to achieve your guidance. So are you still confident? What is the visibility? And are you confident that you can achieve those numbers?
First of all, I am excited about two or three aspects as we stand today. One, we've gone ahead and announced our ambition to create $3 billion segments. In the medium term, get to $2 billion of revenue with 17 to 18% EBIT. And finally, we've reiterated our guidance of 8 to 10% for the current year, as well as EBIT margins in the 16% range. Now, if we look at, if you remember last quarter when we talked, there was a lot of worries that will you be able to come back in quarter two onwards, etc. And we had told you that we do see a pipeline that's about 2x of what we had last year. We do see closures. So we've delivered near 4% quarter on quarter. Yes, the EBIT was slightly down. However, the PAT was up. And to be noted that we had said that we will be investing ahead of time in sales and technology in the first half of the year. And the second half of the year is when you start seeing the improvement in that. And therefore, the trajectory improves from there on. And therefore, we are comfortable in where we are in terms of deal closures, start of work that we've had, etc. In fact, sustainability grew at about 6.5% quarter on quarter. Mobility grew 5% quarter on quarter, and tech grew 1%. Next quarter, I can confirm to you that tech will grow much faster. Sustainability will continue to drive growth, while mobility may be a little muted. So we are comfortable at this stage with our guidance that we have given, and we continue to work on this as we move along.
Hi, Amit. Well, I want to probe you a little bit more on the margins. So is this EBIT margin guidance of 16% exit margins? That is it quarter four? Or will it be the average for the full year? Also, there is a wage hike, right? Effective 1st of November. What kind of impact will that have on your margins?
Sure. So number one, I'm reiterating 8 to 10% growth in revenue for the full financial year of FY25. I'm also saying 16% EBIT levels. So it may be 16, it may be 16.x as we end the full financial year, which obviously means that as we go forward into quarter three and quarter four, the trajectory will improve and go up as we see it. So the exit EBIT range will be higher than where we started. In terms of wage hikes, we have announced wage hikes effective 1st of November for our staff worldwide. And we have taken into account the impact of this. In fact, if I may say this, that we've sequenced some of our investments in such a way where H1 was investment heavy around sales and tech, and H2 will not have that amount of impact. And therefore, the hikes will be absorbed as we continue to grow our margins.
Now got that. Amit, why are you guiding for mobility to be muted in the third quarter? And what is the overall outlook from corporates in the US, corporate clients in the US, if you can give us a sense?
So I'll answer corporates first. So with the rate reduction happening, we are starting to see momentum for people like us in the sustainability segment for sure. Number two, with AI and Gen AI projects getting executed, as well as compute and storage demand increasing, we are seeing a positive impact on us increase in tech or high tech. MedTech for us has finally returned to growth trajectory and continues to do well with Quora as well as digital health platforms. Now, when we look at mobility, the reason we have grown 2 successive quarters is that we invested in building relationship with OEMs across US, Europe, and in Japan that is helping us in terms of growth around software-defined vehicles, including the LTTS iDrive that we have recently launched. The reason we are talking about muted quarter three, and the quarter has just started, but we wanted to be transparent to say at this stage, we believe that there could be furloughs, etc., that may impact the growth trajectory in mobility for quarter three, but quarter is not played out yet. We've just started. More to be said, a lot to be done, and the quarter, let's see how it plays out.
Sir, let's talk a little more on those demand trends. I know the headline is that you will deliver 8 to 10% revenue growth this year, but when it comes to discretionary spends, specifically in the US, what is the sense you're getting? Because in the conference call, you indicated that some projects are getting delayed and maybe that's an election impact. Can you elaborate on this?
Sure. So I'll provide you some qualitative, commentary, if I may. See, if you look at the elections, without getting into the politics of it, there could be a change in strategy and direction around hybridization, electric vehicles, ICE engines across US and Europe, based on how the policymakers decide to take things forward. That will have an impact on spends and design cycles in the future. They may not impact quarter three, they may not impact quarter four, but overall, if there is a shift, it will have an impact on the kind of work that you're doing and the investments that you will need to make. So that's number one. Number two is we don't know where the tariffs will go and what will be excluded, what will be included, and therefore there is a supply chain change that will happen. And I'm not saying disruption, I'm saying change that could happen that will again impact fortunes of companies and therefore the downstream work that we execute. So given all that, we've seen a little bit of questions being played out, but some of these deals we are talking about are significant in terms of our size, and as they happen, we will announce them. And we'll engage and we'll let you know about it. But we are fairly comfortable at this stage where we are. In fact, there's a significant technology partnership that we had hoped to announce that could come out next week. So all that playing out together, we're fairly comfortable in where we are at this stage.
Got that, Amit. But some of the deals which got delayed are significant in size for your company. Will it not hurt your growth outlook?
No, because these were supposed, the two I'm talking about were supposed to anyway start in January, so it's not impacting us right now. And that's why I'm saying that, it's okay for it to take a little more time to decide because you've got that leeway.
Amit, you started by reaffirming medium-term outlook of $2 billion of revenue with margins of between 17 and 18%. Will you be able to put a timeline in terms of what constitutes medium-term?
We are not putting a timeline to it right now. Internally, we do have a timeline. And as we progress forward, we will provide you a timeline. Just that, give us a little bit of time.
Okay, fair enough. What about early indications of FY26? I don't know if it's too soon to ask that, but in general, are you getting the sense that once the politics is out of the way, the election's done in the US, and will FY26 be a better year than the current one?
So we just concluded our Client Advisory Council meeting in Chicago 2 weeks ago, and I'm happy to share that all our clients across the board said CY25 will be better than CY24 and CY26 will be better than CY25. I've got hard numbers in terms of the ratings they gave on a scale of 1 to 7 on where each of those are. And that gives me a little bit of number one. Number two, they talked about technology disruption, how it's impacting their businesses positively, and therefore what LTTS should be investing in to stay differentiated as a company that will help us get some of these future dollars as they start coming out. And again, these were within the scope of our activity. One thing I didn't talk to you about is that we've rebranded the company around purposeful, agile innovation. And the whole idea around that is to be able to be dynamic as the client situations change and be able to respond very quickly and be able to innovate faster and help our clients better, providing inclusive growth for all stakeholders. This is a big difference than where we were, and this we believe will help us, fueled by client demand that we are seeing. So, short answer, CY25 to be better than CY24.
All right, let's talk about inorganic growth. Are you looking at any acquisition in the next 12 months?
Yes, there are. We actively continue to pursue M&A pipeline. In fact, there's a dedicated team, not just of bankers, but technologists working on this at this stage. Let's see what we can close at the right valuations and right fit and come back to you. We will look for something in the hyperscalers in the automotive sector, and we will continue to keep you engaged in that.
All right, we will leave it on that note. Thank you very much for joining in and giving us some perspective on the business today. That was L&T Technologies. We'll take a quick break right now. Up next, our special segment, Quarter Say Quarter, coming up. We get you the expectations from the chemicals segment in the second quarter.